What's good, guys? Welcome to day 8 of the bootcamp. I hope you guys have a good evening. It's pretty cold out here, so I've got my hoodie up. We're in the zone, we're locked in. Today, we are going to be talking about market structure. I want to show you guys a few things about market structure and how it can help you within the markets. Yesterday, we spoke about the uptrend, the downtrend, the consolidation. But the thing is, right, we can identify uptrends and downtrends, but you need to understand that when we're gone past an uptrend or when we're gone past a downtrend, you're going to change. The market change is not always going to be an uptrend, right? So we need to understand, and we need to be the earliest people to understand when market is about to change its moves, right? When its bias is changing, okay? Now, you can wait for the uptrend to stop and then wait for the downtrend to continue, but by then you're going to be too late, right? So for example, like if I drew an uptrend, right, like this, and then I started to draw a downtrend, right? When do we know when the market is going to the downside? Like, what is signifying, right? So there's a few things actually that after a while you start to realize, okay, the first thing I would say is that the market will always do a reversal pattern. If that could be a double bottom, head and shoulders, or even any other reversal patterns that you can think of, right? I only use double bottoms and head and shoulders. It could be a break and retest. It could be anything, okay? Anything that's a reversal, okay? And not only that, it has to also have a reversal candlestick. For example, a inverted hammer, a Marubozu, a engulfing, bearish engulfing, or bullish engulfing candlestick, okay? It can't just be a simple doji, okay? Because that's not a reversal, that's not strong enough, okay? That's number one. Okay, so let's write this down. So there's a few confluences that we can have. So number one is reversal patterns and candlestick reversal. Okay. Now that's just one element of this structure. Okay. But the thing is, right, we understand that for an uptrend, we need to have a higher high, a lower high, a higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, and continue so forth, right? And a higher high. And then for a downtrend, we need to have a high, low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, right? But the issue is, when do we, as a trader, say, okay, we have now turned into a downtrend or uptrend, whatever it is, right? When is it? When do we say, okay, we can now change our bias to a downtrend, okay? So the number one is reversal patterns and candlestick for reversals, okay? Number two is a time frame. If we're on a small time frame, we're gonna see uptrends, downtrends, uptrends, downtrends. It's just gonna keep doing that. So we need to be on a high time frame, okay? So the only way this would work is being on a high, on your highest actually, on your highest time frame. So for me, this is the 4 hour, okay? For me, it's the 4 hour time frame. The 4 hour time frame can let me know the trend that's going on right now, okay? Are we in an uptrend? Are we in a downtrend? What's going on, okay? Now, there's a third thing, and this is very, very important. It's called a break of structure, okay? And now, break of structure is very similar to creating a lower low or lower high. But this is when we go from an uptrend, and we can actually draw a trend line here. We go from an uptrend to a downtrend, and we have that break, right? And we're not going to count the break on the trend line. We're going to count the break until we create a new low, okay? So for example, on this way, we're going up, higher highs, higher lows, higher highs, higher lows, and then boom, a lower low. The first initial lower low, okay? What do? We label this as break of structure, Okay, this area right here. And then we make this the area of interest, meaning that price will come back to here because it needs to test to see really are sellers in control. Sellers come up, they see this move and they sell again. And that's when we now go for a sell right here, right? And we can then obviously place a sell, and then wherever the market structure is taking us, we place a target, stop loss, whatever. Okay, that is the basis of market structure. Okay, that is the simplest form I can give you when it comes to market structure. Okay, now market structure is very, very important. You need to understand these three elements of market structure: is reversal patterns and candlestick reversals, being on your highest time frame, and then the break of structure. If you don't implement these three things, you're going to think it's a change of direction, or you're going to think it's a reversal. And then what's going to happen is you're going to get caught out and you're going to fall for the trap that the market gives you. Okay, so let's have a look. Let's have a look at the markets. Let's have a look. Okay, I'm not even going to have any indicators on. Okay, we're on the 4-hour time frame. Market is going down, right? Down. We're on this downtrend, right? And we have this downtrend going on, and then we reverse to this small uptrend that we got going on. Okay, this is not a major move, but we had this downtrend. Okay, I'm just gonna put this as red line. We have this downtrend, and then price reversed and created a new uptrend. Okay. Now, this is not overall, I agree, yes, this is a downtrend, but just for the video purposes, because I don't want to go back in time to like 1940s, right? I want to bring it to the most updated time frame so you guys are all up to date with the markets, right? We can even use this data. We'll use this data next. But basically, how do we identify that we're on this uptrend? Because obviously we don't want to figure it out right at the end of the trend, because then what does happen? Prices comes down again, right? So what we do is we look at internal structure. Okay, cool. Let's mark it up. We got highs, lows, kind of highs, lows, highs, lows, highs, lows, highs, lows, highs. Ooh, we didn't create a low here. We did not create a low here. So different color. Let's get a yellow out. Yeah, not the yellow. Let's get the blue out. Yep. Okay, at this point, price came down and created this imbalance, right? Meaning that price did not decide to break this low. Price could not break these lows. So we had this price tried to break the low, couldn't. Guys, look at this amazing market structure, right? Amazing. We have a double bottom, and then price breaks this structure. Okay, so do we get the reversal pattern and candlestick? Yes, we did. We're on the highest time frame? Yes, we are. Did we get a break of structure? Yes, we did. Yep. Let me, yes, we did. Okay. And you guys need to understand this. This is the three elements. Then what you can do, draw a POI at this area. Look at this, right? Look at how amazing this is. We place a buy. As soon as price comes here, we place a buy. Stop loss below here. Targeting, let's say we target, I don't know, a key level. So 1.09, let's just say 1.09. A 1 to 4 risk to reward ratio. Boom, sorted, done. We are in the trade, out of trade, boom. Obviously, we're on the 4 hours, we can scale in, whoop-de-whoop, whatever. But we have followed the three principles of market structure, the reversal, the candlestick pattern, boom, boom, boom. We now get to see a lovely 1 to 4 risk ratio trade, okay? Let's remove the drawings. Let's go to this area here, right? Again, price creates this downtrend, okay? Then it creates an uptrend, okay? Cool. Let's get our highlighter tool out. Highs, lows, highs, lows. Ooh, highs. Ooh, we did not create a low. Change the color. Let's change it to red this time, yeah? Boom, here. This is the area, right? This is the high, okay? This is what broke structure. Let's draw it out. This is what broke the structure. breaker structure. This is the high that breaks, and this is what created new structure. Okay, so what do? Breaker structure, we create a area of interest. Okay, boom. Okay, now as you can see, we created area of interest. Price did come down, yeah, but then price came up. Cool. We had a little bit of a consolidation. Price was hesitating to continue to go up. With this candlestick, the wick still closed below. We finally created new highs, which was here, new highs over here. That's where we now know definitely price is going up. Boom, price comes down. We enter a buy. Stop loss just below its lows. Targeting whatever the next key level 1.12. 1.12, boom. A 1 to almost 3 risk reward ratio. Boom, we are out of the trade. Simple as, guys, okay? It is as simple as that, okay? We can continue, we can go back. Okay, cool, over here. Price obviously goes in this uptrend. Price decides to come down. Cool, let's do it, okay? Let's mark it up. We've got lows, highs, lows. Oh, lows, highs, lows, highs, lows, highs. Okay, boom. We created basically the same low, right? Okay, this is where the breaker structure happened. Cool. This is the break, right? Price has broken this area. Price has broken this low here. So cool. What do? We'll put breaker structure here. This is the low that did not get respected. Boom. Breaker structure. We draw area of interest. Okay. Area of interest. Boom. Cool. We then enter for a short position. Once this candlestick closes, short position, we can keep our trade at these highs, or you can, because we're actually waiting for this candlestick to close, right? Boom. Let's actually, for the example, let's actually keep it above this high to put on the safe side. Then targeting key level. Cool. Key level is we can actually do 1.5, 1.05. We can just target the lows. We can actually, yeah, let's target these lows, right? Boom, target 1 to 3, okay? Obviously, we do have a bunch of key levels. We have to scale in to see which levels respected and so forth. You can actually see that this area has been respected quite a lot. This area has been respected quite a lot. So we can target that, okay? Guys, this is market structure. Okay, and you can find so many opportunities based on this market structure. Okay, you can find a lot, and you're training your eyes to see what the market is giving us. Because if you are a day trader and you don't know what's going on in the market, you will not be able to find moves. If you don't train your eyes and see what the market is giving you, you will not be able to make moves in the market. It's simple as. And if you guys are trading right now and you don't understand simple market structure, you don't understand breaker structures, you don't understand targets, you don't understand key levels, you don't understand round psychological levels, learn it. Watch my videos, understand it, okay? Because without those confluences, you will not have a solid trade. For example, you would think, oh, we're continuing the uptrend because this is the low. But you're not looking at the internal market structure that we had. This was the new low that was created. This was the high, this was the low. Price continued to make a new high. This is the new low. So yes, cool, we were still in this upwards, massive upwards trend, but internally we had the breaker structure. And not only did we have the breaker structure, guys, so powerful, right? Market structure. We had double top, boom, right? Reversal pattern. Number 2, left shoulder, head, right shoulder. We had a head and shoulder pattern, okay? Boom, price going to the downside. What does that mean to us, guys? That means that this head and shoulder pattern works well because that breaker structure line is the neckline, okay? So when we put these confluences together, what happens is we're building a story, a narrative for the market. If you guys want to have high probability trades, you need to build a narrative in the markets. You need to build a storyline for yourself to convey why you are buying or why you are selling. There's no reason for you to sell or buy without a reason. If you are buying just because you saw a candlestick formation or you saw moving average has crossed over, that is not enough. You need to have a story. You need to have a why. right? If you don't have a why, do not place a trade. Guys, I have gone through many trades where I do not have a why, is not a high probability trade, and what has happened is I've lost. If you believe the market is going down, build yourself a story, build yourself a rapport of why this is going down, okay, or why it is going up. Because if you don't do that, you're going to lose a lot of money. And I've gone through it where I've lost thousands and thousands of dollars because I thought that price is going down or going up. And I was super confident because I just saw one confluence, but I didn't have a storyline. And every time I place that trade, my psychology is failing me because I'm believing that, oh, the market's going up, the market's going down, and I keep closing and I keep buying. And I've gone through that, okay? So as long as you guys don't make that same mistake and you understand simple market structure, do that. Okay. Now, yesterday I told you guys to label uptrends, downtrends, and consolidations. Okay. I need you guys to now upgrade those labels and find an uptrend, downtrend within the same market, within the same time frame. Okay, like I was showing you today, this one, right? I want you to show me where the breaker structures are. Okay, don't just do it with one pair. Go and have a look at all the pairs that you have: Euro USD, GP USD, Euro JPY, USD JPY. Do it to all the pairs. Find the pair that you like. Okay. You can't just trade a pair because I trade a pair. You need to trade a pair that you like, okay? So now that we're getting more deeper in this bootcamp, you guys need to start building your own trading style. And we're gonna talk more about that next week on trading styles, building a trading strategy, and so forth. But what you need to understand is the basic, the structure. So right now, we're not building the house. Right now, we're building the foundation of where our house is going to be built. Okay. And in order for that house to be strong, you need to have the right foundation. Okay. It's like the three little pig story. Where these three little pigs, two of them didn't have the right foundation. When the wolf came and blew their house down, it's because they didn't have the right foundation, right? You need to have the right foundation, or the big bad wolf, i.e., the banks, the big traders, they are going to blow your money away. Okay. So, guys, I know that we have had a really, really bulked up week and we're going to keep going in this momentum. But please, guys, over the weekend, it's Saturday today. Over the weekend, please, please, please make sure that you are focusing on market structure and you're learning from the basics. I understand that you're not making money right now, but once you understand this, you're going to build the confidence to make money. Okay. So, other than that, guys, make sure if you're not understanding anything, comment down below. Please like the video, subscribe, share it to every trader that you know, share it to your friends, share it to anyone that needs to learn trading. If it means that you put your friends on to trading because you want to build a friendship group of traders, go ahead, send my videos. Please help the algorithm. And guys, I will see you on Monday. Okay? Peace out, guys.